Hi everyone, welcome to the post-market report for 11th May 2026. Here we are going to discuss how the markets traded today along with some stocks in news as well as bonus coverage of a commodity in focus. We begin by first taking a look at Nifty. Nifty opened lower and traded in the red for the whole trading session. There was some recovery after 10:30 a.m. However, a sell-off seen towards the end of the trading session sent the index tumbling by 1.49% or 360.30 points to a close of 23,815.85. The NSE index saw a correction today due to a spike in crude oil prices over the weekend, PM Modi's appeal to reduce gold purchases, and working from home to reduce fuel consumption for the next year amid the West Asia conflict, falling rupee, and persistent FII exit. Most sectors ended in the red, with Realty and Consumer Durables taking the biggest hit. A lot of jewelry shares took a hit due to the PM urging restraint while buying gold. The healthcare segment posted some gains and the volatility index VIX saw another spike. Today's correction resulted in both supports that were mentioned today morning being broken. Now, supports may be readjusted downwards to 23,690, followed by 23,555, while resistances will be at 23,870, followed by 24,000. Tomorrow, given the sharp sell-off seen today, we may see a recovery unless crude prices spike even more, in which case the index will see further correction. In case there are no surprises overnight, a positive bias in trading may be expected. Bulls will take over decisively only if 24,660 is breached on the upside, however. A break below the resistance level placed at 23,555 will hand control back over to the bears. Let us now move on to our view on how Sensex behaved today. Sensex underperformed Nifty to close lower by 1.70% or 1,313 points to end the day at 76,015. After today's correction, supports may be moved lower to 75,870 followed by 75,325, while resistances may be readjusted to 76,750 followed by 77,255. The BSE index will be bullish above 79,360, however. A break below the resistance level placed at 75,870 will cause the index to enter bearish grip in the short term. Next, we will take a look at the levels for crude oil. Since no progress is being made in the West Asia conflict, with the US and Iran not being able to come to a mutual agreement along with further escalations, crude prices as a result saw another spike. The commodity seems to be consolidating for now, with a bigger range of price action owing to heightened volatility. Supports after the spike may be adjusted to 9,230 followed by 9,035, while resistances may be placed at 9,435 followed by 9,790. As of 4 p.m., crude oil prices seem to be trading in a range at higher levels, which will be maintained for now unless there are new updates from the Middle East. Any new escalations will send the commodity higher and vice versa. A positive bias with the support as a floor is being observed for now. The commodity will remain bullish above 8,880, while a break below 8,440 may lead to lower levels if the momentum sustains. Finally, let us look at a few stocks in the news today. Canara Bank shares fell around 4%, after the bank reported a nearly 10% decline in Q4 profit to 4,506 crore rupees. Despite the drop in earnings, asset quality improved and the bank announced a dividend of 4 rupees and 20 paise per share, offering some support to investor sentiment. UPL reported a strong Q4 performance with net profit rising 18% year-on-year to 1,061 crore rupees, while sequential profit growth remained robust. The company also announced a dividend of 6 rupees per share, boosting optimism around its improving operational performance. Jyothy Labs shares plunged nearly 11% after Henkel decided not to renew the licensing agreements for PRIL and Fa brands beyond May 2026. The move has raised concerns over potential pressure on the company's revenue and margins in the coming financial years. With this, we end our post-market report for today. Thanks a lot for watching. And as always, do not forget to add a like, share the video and subscribe to our channel for stock market related updates.